Welcome back, dear traders. You're watching an overview and forecast for the New York trade on April 5. Geopolitics is again ruling market sentiment. The rally on Wall Street was driven by strong performance of the high-tech stocks, and now market optimism is waning. The US stock market closed with confident gains yesterday. The Dow Jones edged up 0.3%. The Nasdaq showed the strongest intraday gain of 1.9%, and the S&P 500 added 0.81% to close at 4,583 points. Wall Street was trading mixed in the New York pre-market. The S&P 500 is likely to trade in the corridor between 4,540 and 4,620 points today. Apparently, the economic calendar is taking a back seat as the market is focused on geopolitics again. Today, investors are in the wait-and-see mood for a few reasons. The peace talks between Russia and Ukraine have come to gridlock. The US and its European allies are going to impose a new package of sanctions, and the EU leaders have not come to a common denominator about the embargo on Russian oil, gas and coal imports. Apart from the embargo, Moscow is braced for restrictions on aircraft leasing, imports and exports of more consumer goods, and new personal sanctions on the Russian elite. Tomorrow, the Kremlin will be notified of the fifth package of sanctions. Meanwhile, the commodity market is taking the lead, taking the shine of riskier stocks. Besides, the US stopped the Russian government on Monday from paying holders of its sovereign debt from reserves held at US banks. On Wednesday, the US Fed is due to release the minutes of the last policy meeting that will shed light on the nearest rate hike, and thus traders should be ready for high volatility and market moves without clear-cut trends. The US dollar was advancing yesterday amid mounting political risks. Its index approached 98.90. Today, the greenback halted its rally and reversed downwards. The index is expected to trade in the corridor between 98.60 and 99.10. It's set to trade cautiously today, and the US currency might regain its footing on Wednesday because of the Fed's minutes, as traders will cement expectations of a sharp rate hike. Today, investors found out that the US trade balance deficit was at $89.18 billion in February, roughly the same record levels as $89.22 billion in January, and trade balance looked a deficit due to lower exports from China, the European Union, Mexico and Canada. On the other hand, imports rose 1.3% to a record high level of $317.8 billion, mainly on accounts of crude oil, petroleum products, capital goods, as well as payments for intellectual property, fares and transport. The USD CAD pays slipping, trading at 1.2470 at the time of recording this video. The loonie advanced to the strongest level in 5 months amid rising oil prices. The Canadian dollar is holding the upper hand over its American rival. The corridor for the currency pair is defined between 1.2400 and 1.2520 for today. The looming sanctions against Russia raise concerns over tighter global supply. Brent futures climbed 1.7% to $109.35 a barrel, and WTI futures rose 1.6%. Later this week, Washington is widely expected to slap new anti-Russian sanctions to hurt the Russian energy sector. Besides, state-run Saudi Aramco warned its buyers from various countries about a sharp increase in invoices for May. The crypto market has perked up. Bitcoin resumed its growth, having gained 1% overnight, and the digital token has approached the level of $47,000. Analysts point out that Bitcoin is completing its consolidation amid growing buying pressure. The flagship crypto is projected to reach its recent peak at $48,200, and this will hardly happen before the publication of the Fed's minutes. Technical indicators suggest the flat market for a while, and the crypto is set to trade in the range between $45,500 and $47,500. Our experts warn that the US major stock indexes are going to trade mixed today. Tomorrow, investors will take the wait-and-see stance. The market will receive fresh impetus on Wednesday. Will US stocks trade higher or lower later in the week? We will share our forecast tomorrow. See you!